Stocks sell at silly prices from time to time. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act.
How does Warren Buffett prepare for a recession? Adhere to the standard game plan. Buffett stated on CNBC that he thinks before a recession, one should do business as usual. While you don't want to abruptly cease investing, you also don't want to take risks by buying more stocks than you otherwise would. One of the world's most successful investors, Warren Buffett, has over the years given investors insightful advice on how to weather recessions. Noting some of his timeless pearls of wisdom is worthwhile while the market is erratic and turbulent. Buffett advises making investments in profitable ventures like farms, real estate, and companies that manufacture goods and services. Cash flow from these assets can be reinvested to put to other uses, such as paying dividends. Putting money into profitable assets creates a steady income stream independent of the state of the market. Wealth is produced in large quantities by productive assets like farms, real estate, and, yes, owning a business. The majority of these property owners will benefit. In the 2021 Annual General Meeting (AGM) of Berkshire Hathaway shareholders, he spoke of the passage of time, an inner calm, ample diversification, and a minimization of transactions and fees. Buffett counsels investors to steer clear of short-term thinking and concentrate on the long term. He thinks that investors who hang on to their money for the long term will be rewarded as the stock market continues to rise. He has gone so far as to say that one should only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. In order to further emphasize the same idea, he believes that diversity is the defense against ignorance and that it makes very little sense. Diversity serves as a safeguard against ignorance, as one stated. It makes very little sense for those who know what they're doing. As a result, he counsels clients to increase their expertise and read widely before making financial selections. Buffett cautions against exaggerating the volatility of the market. It's easy to get carried away by the crowd and make snap judgments during periods of market turbulence such as the current one. But investors ought to maintain composure and concentrate on their long-term objectives. In a 1987 press conference, Buffett said, "Erratic markets are ideal for any investor, small or large, so long as he sticks to his investment knitting." This helps to better clarify the previous concept. The volatility brought by the irrational big-cap speculation by money managers will present additional opportunities for wise investing decisions for the genuine investor. Such volatility can only harm him if it forces him to sell at inappropriate times due to psychological or financial constraints. Investors should seek out businesses with strong fundamentals, such as a stable income stream or robust balance sheet, and a competent management team, according to Buffett. Businesses possessing these attributes have higher probability of enduring a recession and emerging from it with greater strength. Extrapolating from the previous sentence, Buffett once said, "If a business does well, the stock eventually follows." This essentially suggests that one should concentrate on the company's core values and underlying strengths. Investors should only consider making investments in the two if they are stable and sustainable. Recent information on the state of the world economy, inflation, and the upcoming recession validates Buffett's timeless advice on investments. Fidelity Investments said that investors who stuck with their stock market investments during the COVID-19 outbreak saw respectable profits. In the last 3 years, the S&P 500 has returned 34.39%. In the last 5 years, it has returned 52.47%. This emphasizes how important it is to keep an eye on the big picture and refrain from overreacting to market volatility. From 2020 to 2022, stocks saw a sharp decline. They've returned to earth this year. A recession is imminent. Geopolitical unrest is rampant. Inflation rates are at 40-year highs, and S&P 500 is down roughly 18% year to date. The easy money climate to which many investors have become accustomed over the last 13 years is now in the past. Value stocks, which have more steady near-term cash flows, are winning the day in today's fear-driven market at riskier meme stocks. SPAC and NFT bets have dried up. The best performing equities in terms of sales and earnings per share over the last 3 years are tracked by the S&P 500 Growth Index, which has dropped by about 15% this year. During the same time period, the S&P 500 Value Index, which monitors equities with the best prices, fell by just 4.8% during this annual shareholder meeting for the Berkshire Hathaway in April. Warren Buffett cautioned investors, "Wall Street makes money one way or another, catching the crumbs that fall off the table of capitalism." Unless people take action and receive a cut of the results, they cannot profit. When individuals gamble instead of investing, they profit far more. The Oracle of Omaha claims that knowing a company's foundation is what separates investment from gambling. The stock price and volume are the main foundations of technical analysis. Traders do not attempt to forecast a company's future. Instead of examining the underlying industry or state of the economy, they employ chart and pattern recognition to forecast the direction of a stock. When an investor uses fundamental analysis, they assess the company's value by looking at its financial status, performance, industry, and competition. If the stock is then bought at a discount, they buy it. A Schwab survey indicates that 15% of the U.S. stock market investors currently say they started investing in 2020. Most people who established their first non-retirement investment account in that year were under 45 and had lower incomes than more seasoned investors. Over the past 2 years, approximately 20 million new investors have flooded their excess funds into the U.S. stock market, fueled by a flood of pandemic stimulus money. These investors used online forums like Reddit and others to spread stories that caused the prices of shares of companies like GameStop to soar 100 times in a matter of months. These stock rallies were mostly driven by coordinated short squeezes driven by technical factors rather than long-term company viability. While fundamental analysis is important for long-term investing, which is less vulnerable to the whims of the economy, technical analysis is good for the short-term trading and for timing markets. The worst news might be an investor's finest ally. It allows you to purchase a portion of America's future at a discounted cost, he stated in the 2008 New York Times opinion post. Additionally, Buffett predicted that there would be short-lived gold showers and that black clouds would cover the economic sky in the 2016 annual shareholder letter. Buffett said in an opinion post in the New York Times that businesses will indeed suffer earning hiccups, as they always have. For the next 5, 10, or 20 years, however, the majority of large corporations will continue setting new profit records. It's difficult to predict when or if there will be a recession without a crystal ball, but history shows that economies always recover after one. Additionally, he stated, "In my opinion, owning the S&P 500 index fund is the best thing to do for most people." In 2020, during his first virtual shareholders meeting, people pay enormous sums of money for advice they don't actually need. Investing in America and holding on to the belief for several decades would yield greater returns than purchasing Treasury securities. The historical annualized average return of the S&P 500 since 1957 has been around 11.88%. Buffett said at the 2022 Berkshire Hathaway annual shareholders meeting that the best thing you can do is to be extremely competent at everything. People will offer you a share of what they produce in exchange for what you give. This is his way of emphasizing that skills are not affected by inflation or recession, unlike money. According to Warren Buffett, anything that you develop yourself is the best investment by far, and it's not taxed at all. Final advice from Warren Buffett is still applicable in 2023. Investors should position themselves for success in any economic environment by concentrating on the long term, diversifying their portfolio, investing in productive assets, avoiding overreacting to market volatility, and choosing companies with excellent fundamentals. That's all for today. If you liked the video, please give it a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Also, express your valuable thoughts in the comment section below. Until then, bye. Also, spend some time watching other videos on the channel.